This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for January 17th, 2020. Corn market up 13 3/4, beans up 5 3/4, Chicago wheat up 5 1/4, Minneapolis up 9 3/4, Kansas City up 9 1/2. On the week, we saw corn up 3 1/2, beans down 5 1/4, Chicago wheat up 6, Minneapolis wheat up 1 3/4, and Kansas City down 1/2. Really, when you look to the market, a big turnaround on Friday versus what we saw on Thursday. Big liquidation Thursday on a buy the rumor, sell the fact type environment on the trade deal. Today we come roaring back and finish at key levels here. Realistically, we had to hold this 9.20 level in beans. We did, and moved about 9-10 cents away from it off the March. We really needed to hold this 376 3/4, 377 area in corn. We did, moved away from it, and now stand within 1 cent of the resistance point. So big movement within a tight range and a lot of coiling here within this corn market. Sooner or later we'll break out, and if we get to the top side, it's 395 to 414. We've really got to look to marketing. We kind of call that 395 to 410. On the bean side of things, if we can get to the top side, we're talking 964, 981, and then 1004. So just be attentive. Those are your old crop ranges you really want to zone into. If we can get to the top side, if we break down here, and if we would have taken that out today in corn, we could have been all the way down to 352 based off some of the price counts, and the bean market talking 880. So again, a lot to gain or lose here off this coiling environment. Eventually, we do believe we're going to break out of this range here, and you just got to be prepared. And if you get opportunities near those upper end of the ranges, you got to be there and ready to react. Yesterday should have been a great reminder to the risk of the market. Feeder cattle mixed, you saw down 225 on the week. Live cattle up 80 or 22.5 to 82.5 with April leading the charge, down 107.5 on the week, and hogs up 80 on Friday, up 42.5 on the week. Live cattle base 124, dress trade 200, cutouts and exports both on the rise for cattle. So a good looking market, but we've got funds that have bought a lot of contracts sitting on some lofty numbers here, and you just got to be cautious there. Also, we're into some key price counts and some key seasonal areas where you got to start doing some marketing there in cattle. Hogs stuck in a little bit of a rut near the bottom end of the range, 60.45 the index, so we've got about a $7 gap there between Fed futures that we're going to need to close up. Exports were good, but the cutouts were a little bit weaker. So until we see demand pick up, guys, we just have too many numbers around for hog production, too heavy a weights, and we need to see bigger demand to offset that. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss. It is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon.